Stocks trying to react to a new GOP tax plan. Brad McMillan, Chief Investment Officer at Commonwealth, joins me now. Brad, what was your reaction? Not many details, but it's certainly something more for the markets to chew on.
When I read through the tax plan, my first thought was, from a Wall Street perspective, this is pretty much everything they can ask for. All of the major items, all of the major wish list items are there. And I think it's going to end up being positive for the market if it gets through.
But obviously that's a big if. Do you change your strategy? Does this make, maybe tech more attractive if we do get some sort of repatriation? I mean, we know just how much money tech companies like Apple, Cisco, Microsoft are holding overseas.
I think that's more of a company-specific issue, and certainly many of those companies are in tech. What I took away from it was the real beneficiary, and you saw this in the market reaction yesterday, were small caps. I mean, the provision for immediate expensing of business equipment investment, that could be huge for smaller companies. And I think that's going to be one of the real winners here.
So do you think the sort of Russell 2000 could outperform the S&P by the end of the year?
I think that's quite possible. At the same time, there are other less immediate benefits that will help the S&P. And it's also going to help them as well, but the effect will be more substantial on the Russell 2K.
Well, what are some of those benefits that you think will help the S&P 500? I mean, are we going to sort of sit at 2,500 in the coming weeks?
Well, I think you're going to see capital return from Europe. Certainly, if the tax provision passes, you're going to see favorable tax treatment of foreign earnings, which is going to help multinationals more than anything else. And finally, when you look at the way that the taxes are going to be treated overall, there's going to be a lot less in the way of trying to game the system. I think companies that are better positioned to operate materially and improve their operations, eliminate those tax strategies, are going to benefit from that.
Now, when you were on with us last, you made a call of something like 2,700 for the S&P 500, which was pretty bullish, 2,700 by the end of the year. Tell me what could derail that forecast?
Well, at this point, the market is assuming that earnings are going to continue to improve. We've seen double-digit earnings growth in the past couple of quarters. It's likely that's going to continue, but it's certainly not guaranteed. I think there's very little in the way of optimism about the tax reform actually passing, but that's actually stepped up. So if this were to go down, if there were to be more political issues, I think that would also be a headwind. Those are the two things I'm most worried about.
And obviously, we can't forget about the debt ceiling drama, which is going to resurface about the first or second week of December.
And that's certainly a concern. But at the same time, I think the narrative on that may well have been changed. By President Trump actually cutting a deal with the Democrats, I think that's substantially reduced the ability of elements of the Republican Party to hold the process hostage, because they know that President Trump might well go to the Democrats. And I think that's actually going to help substantially the process in December, or at least I hope so.
All right, Brad, we'll leave it there. Thanks so much for joining us.
Thank you, Scott.
All right, I'm Scott Gamm, and you're watching The Street.